What is going on, everybody? Welcome to video number 5 of the Forex Beginner Bootcamp series. In this video, you are going to learn how to read a price chart, learn how to read candlesticks, and how to identify trends, and then some other just beginner technical analysis as far as support and resistance as well. So first off, you need to be able to identify and learn how to read a candlestick. So as you can see, these red and green bars are candlesticks. Very simple to understand and read. They show price over a given time frame. So for example, we are looking at a daily chart. So each one of these bars, each one of these candlesticks represents one day. It shows price action over that course of day. If we was to go to a 4-hour time frame, now each one of these candlesticks represent 4 hours of price action of what that candlestick, what this pair did in that 4 hours. If we was to go to an hourly time frame, now each candlestick represents 1 hour in time. You can even go down to a minute time frame. Now each one of these candlesticks represents 1 minute. Let's go back to the daily chart. It's more clear, kind of easier to understand when you're starting out. Let me zoom in. So on this daily time frame right here, each one of these candlesticks represents one day. So for example, today is April the 9th. This is the candlestick for April the 9th right here. Next, this candlestick is for April the 8th. This candlestick is from April the 7th, so on and so on. Now you're probably asking, what does the wicks mean? What does the colors mean? So typically, your green candlesticks is going to be your bullish candlesticks. Now keep in mind, you can set the colors to whatever you want to set them to. It is kind of industry standard that your green candlesticks is going to represent bullish candlesticks, and your red candlesticks is going to represent bearish candlesticks. Now you're probably wondering, what is bullish, what is bearish? So bullish represents price going up. Bearish is going to represent price going down. So your green candlesticks represents price going up. Red candlesticks is going to represent price going down. So anytime you see a green candlestick, you know there's a bullish candlestick and price have went up in that given time frame. I'm gonna do a little diagram. Drawing is not the best, but I'm going to illustrate how a candlestick is drawn. Not the best. Green candlestick. This is going to represent a bullish candlestick. And then as you can see, let's make it back green. We're going to draw some wicks on it. Let's just say this is a bullish candlestick. Now, why did I just draw this out when they're all here? Because this is how you see. So these little black wicks that you see at the end of the candlesticks represents where price went during this given time frame, but it didn't quite finish. So during So during a bullish candlestick, price opens at the bottom. Price opens at the bottom during a bullish candlestick. And it closes at the top. Now, The body represents where price opens at and where price closes at. Write this down. Remember, for a bullish candlestick, price opens at the bottom, it closes at the top. So for example, if we look at this candlestick from April 9th, this day before on April 8th, this was a bullish candlestick. It means it opens up here, it opened at the bottom, it closes at the top. Now, because of this candlestick closed at the top, the next candlestick, which is April 9th, you see it started where the previous candlestick closed at. So this was a bullish candlestick as well. It opened at the bottom right here and it closes at the top. A bearish candlestick, let's draw a bearish candlestick. You can see the drawing's not that great. Bearish candlestick, we're going to make it red. Draw us some wicks as well. Boom. Now the bearish candlestick, guess what this one does? It opens at the top. Bearish candlesticks opens at the top. And it closes at the bottom. Okay, so let me put this here for y'all know as well that the green is going to be bullish candlestick, price going up. The red is going to represent a bearish candlestick, price going down. Okay, you all. So now you know a bullish candlestick represents price going up. It opens at the bottom, it closes at the top. Bearish candlestick represents price going down. It opens at the top, it closes at the bottom. So now you're probably asking, what exactly is the wick? What is these little stick things sticking out of the candlestick? Those are called wicks. Now a wick represents where price went in this given time frame, which is very important. So for example, we're looking at, let's go back to this day. Let's go back to April 8th, which is the yesterday's candle. Price opened down here at the bottom where the previous candle closed, and then price ended up closing at the end of this day. You see price ended up closing right here. You see a big O, you see a big line, well, you see kind of a big wick up to the upside. This just shows during this daily time frame, at one point in time, price did extend up and go higher, but price did not close up here. Price closed right here. So the wick just represents where price went at during this given time frame, but it did not close. It'll be easier. Let's kind of switch to a 1 minute time frame. And let's just see if we can kind of watch this candlestick. So as you can see over here, 1 minute, 60 seconds. This candlestick that is forming right now is 50 seconds into forming. I'm making this video around 8 o'clock at night, so it's not a lot of movement in the markets around this time. But as you can see, so price is going up, price is going down. The only bar that you can see is where price opened at. You see price opened down here. And let's just see how this forms. See this wick is here down here to show you that some point in time during these 60 seconds, price was once upon a time down here. Got 4 seconds left to see how this candlestick closes. Boom. Bullish candlestick. Price opened down here. Price ended up closing right here. At one point in time, these wicks represents what price was. Now we're watching another candlestick form. Now remember, we're on a 1 minute time frame. So this candlestick is going to represent this whole minute. We're 30 seconds into it. Notice this formula is showing you what price is doing, how price is actively creating this candlestick. So you got 10 seconds left. Just see if you give us any type of movement. Okay. This is called a doji. There's a lot of different candlesticks. There's different candlestick patterns. The main thing that we are going over in this video right here, this is just showing you how to read a candlestick. Let's go up a little higher. Let's go to a 5-minute time frame. As you can guess, each one of these candlesticks represents 5 minutes. This candlestick has 28 seconds left within this 5-minute span. As you can see, these are 3 bullish candlesticks. The wicks just represent where price went at during that time frame, but could not quite close. Boom. This one was a bearish candlestick. So let's jump back to the daily time frame, you all. Hopefully you got a good grasp of candlesticks. You know what candlesticks is. Candlesticks just represents the price over that given time frame, depending on the chart that you are looking at. Remember, bullish candlesticks opens at the bottom, closes at the top. Bearish candlesticks opens at the top, closes at the bottom. So that's all on candlesticks. I'm about to delete this off the screen, you all. So take a screenshot, write it down, notes, whatever you got to do. Next, we are going to go over trends, you all. You need to know that the market could only be doing 3 things. The market can be trending up, making an upward slope. This is called a bullish trend. Bullish trend. Right, that a bullish trend consists of higher highs and higher lows. So bullish trend, and also write this down as well. Your bullish trend is always going to go from bottom left to top right. So your bullish trend is always going to go from bottom left to top right. Show you kind of exactly what that looks like. Break it down diagram. Bullish trend just simply looks like this. You're going to have highs, lows. You're going to have higher highs. You're going to have higher lows. Higher highs. Lower lows. And just one more time, I'll give you all another higher high. We're going to call this first one an initial structure high. initial structure low. Now this is where the trend starts, you all. The trend start, you got a new structure, what we're just going to call it, a new structure high. Higher high. Now you're going to have, instead of, we didn't create a lower low, we have a higher low. HL just represents higher low, you all. And then you just got higher high. Another higher low. Boom, a higher high. So remember, what makes up a bullish trend? A bullish trend consists of higher highs and higher lows. It starts bottom left to bottom right. Let's move this over a little bit. Next, you have a bearish trend. Remember I told you all in the previous video, the market's either going to go up or they're going to go down. You're going to have a bullish trend or you're going to have a bearish trend. All the markets is going to be consolidating. Those are really the only three things that the market can do. But let's go over exactly what is a bearish trend. So a bearish trend consists of lower lows and lower highs. And it's going to go from top left to bottom right of your chart. Let's just show you what that looks like. We're going to start at the top this time. Go to make a low. And price never goes up and down. Price will go up. Price will go down. Price will go up. Price will go down. Price will go up. Boom, price will go down. So remember, we have a initial structure low. Price went up to make an initial structure high. And then this is when the trend starts, or how you identify a trend. You're going to notice we're going to get consistent lower lows. And we're going to have lower highs. Lower lows and lower highs, you all. Bearish trend consists of lower lows and lower highs. And then the third thing that the market can do, you all, it can consolidate. Now the market only trends 30% of the time. So a lot of the time you're going to be seeing the market just kind of moving in sideways, choppy movement, not really trending. Doing something like this. Which could be very confusing for new traders. We call this consolidation. It's choppy, sideways movement. So remember, the market can only do three things. Only do three things. Trending up, which is bullish. Trending down, which is bearish. Or it could be consolidating. Jot that down, you all. It's very, it's kind of just the basics of price action, basics of technical analysis. You gotta know these basic things before you can even think of making money in the markets. You gotta know how to identify a bullish trend. You gotta know how to identify a bearish trend, and you gotta know when the market is consolidating. This is going to help you build whatever your trade plan is. However you view the markets, this is what's going to help you identify it. Like it says, at the root of every complex advanced trading strategy, it's this simple stuff of being able to identify a bullish trend, identify a bearish trend, identify sideways movement. Let's kind of scroll over. Let's look at the chart. Let's see if we can actively, all you got to do is, let's start over here. So just looking at this, you all, just watching this video, tell me what from this point to this point, I want you to be able to identify what type of trend this is. Give you a few seconds in your head, think of what do you think this type of trend is. Okay, if you said it's a bullish trend, you are correct. We start at remember, bullish trend start at the bottom left, goes to the top right. What does a bullish trend consist of? A bullish trend consists of higher highs and higher lows. Let's look at it. Let's see. It looks like we have higher highs. It looks like we have higher lows. Bullish trend. Just identifying it out through you all, just so that you can see it. Just higher highs, higher lows. It's moving in an upward slope. It says an upward slope. Let's just put on some higher highs for you all, just so that you all can see it. Higher highs. Higher highs, higher highs, higher highs. This is a bullish trend. Remember, it also consists of higher lows. This is not clone. There we go. Higher lows, higher lows, higher lows. Boom. Bullish trend, you all. Same thing. Oops. Let's see if I can. Oops. Let's reset it. Same thing that we talked about over here, you all. What does a bullish trend consist of? Bullish trend consists of higher highs and higher lows. Start from the bottom left, goes to the top right. Bearish trend consists of three things. So it's not hard. It does take a lot of you going back to the charts, you looking at it, you being able to kind of identify these things, but you do need these. You need to be able to identify these, before you even think of making money in the markets. So now that we identified a bullish trend, you know what a bullish trend is, you know what a bearish trend is, you know how to identify them, you know what it makes up of, what makes them up. You need to know when to trade. Me, myself, I'm a trend continuation trader. I'm a trend continuation trader. So I like to buy low and I like to sell high. Now, when I am in a bullish trend, I like to buy down here. Just clone it. I like to buy here. If I am looking at a bearish trend, so in a bullish market, I like to buy when the market retraces. In a bearish trend, I like to sell when the market retraces. Okay, and then during consolidations, that's kind of more so advanced. I got it, when we're looking at corrective patterns. When you are just starting out, you really only trade during when the market is trending, when you can properly identify the trend. You want to buy at these areas of when the market retraces. Remember, the market is never going to go straight up. The market is never going to go straight down. Okay. Next, be sure we're going to go over some support resistance and kind of go over this a little bit more in depth. I'm about to delete this off of the screen. So screenshot it. I hope y'all took notes, whatever that you need to do, because it is about to delete. Okay, next draw, we're going to take it to, okay, you all. So once price goes up, we got this high. Price comes back down. Remember, the bullish trend, they consist of higher highs and higher highs and lower highs. We're going to look to buy at these levels. Price hasn't really given us the way for us to identify this yet. So we're just going to delete this. So looking at this, so price goes up, price comes back down. If price goes up, makes this high, we know we are looking at a bullish trend trade setup. Now, once we break through this, this is what it's called. We're going to put a horizontal line here. This is going to be your newfound support. You're going to notice price is going to come back down to this area. Likely retest it. This is going to be support. This is where we're going to look to buy. Now, what is your new high is going to turn into your resistance. Now, this is called resistance. You have support, you have resistance. Well, we're not going to put an error here, kind of confuse you. Now, when price approaches this resistance, price is either going to do one or two things. Price is either going to respect it and get denied at this area, get rejected, and either come back down, give us some sort of retracement. Our price is just going to go straight through it and make a new high. Now, Remember when price was down, so remember this is now resistance. This resistance is going to change to support. Now that price is above it, it's support. When price retraces, we will have a new resistance line. This will be your newfound resistance. And remember, you always want to buy in a bullish trend. You want to buy at your support areas if you are doing trend continuation. Let's go back over to the chart, you all, so that I will be able to show you all some support and some resistance. Let's go back to the bullish trend that we was looking at. Okay, I don't feel like we was that far over. We may have been. Okay, data. Okay, y'all, I'm about to delete that off the screen. We was right here. Let me zoom in just a little bit. There we go. Zoom out so that I can accurately show it. So just to kind of show you all what it was in the bullish trend that we looked at previously. So from here, price goes up. Remember, bullish trend consists of higher highs and higher lows. Price comes back down. Now, once price went down, this is going to represent when price come down, this is going to represent support. I'm sorry, it represents resistance. Represents resistance. Price then goes up to resistance. As you can see, price got to this area. Although it did make a higher high, price did get negated, ultimately came back down. Price went back up. You notice how price is respecting this level, created a newer high, broke through resistance again. Now, this same resistance, price came back down, respected this same area. This is known as support. Now, it's no longer resistance, it's going to be support. Price come up. Price come down. Notice that we're going to make a new line of support. We're also going to have a new little line of resistance. Just identifying support and resistance. You all watch the arrows. Price go back up. What was resistance before? Price still holds. Negated. Where does price manage to come its way back down? Come right back to this support line, made what is called a double bottom. Price ultimately ends up breaking what was resistance, create a newer high. Now, this is no longer resistance no more. Remember, if resistance is broken and price is above it, it becomes support. What do price do? Price comes right back down to the support area. And so on and so on. Just a very brief introduction to support and resistance. Remember, in a bullish trend, if you are trying to do a trend continuation trade, you are going to buy at support areas. In a bearish trend, if you are going to trade with the trend, you are going to sell at resistance areas. So just very introduction. I know there was a lot of information kind of compacted in this video, but you should know how to properly read a candlestick. You do know what makes up a trend. You know the market can only do three things. The market could either only be bullish, bearish, or it can be consolidating. You know, a bullish trend consists of higher highs and it consists of lower highs. A bearish trend consists of lower lows and higher lows. There's going to be more videos that do come out periodically that's going to dive into these subjects, you know, kind of a lot deeper. This is just some very beginner friendly stuff. You need to be a part of the $1 Million Visions Telegram group right here. You want to be in the $1 Million Visions Telegram group. You want to follow me on TradingView. All of those links will be in here. I hope you all gained a lot of value from this little beginner bootcamp series. You know, if you're brand new to trading, you should have some type of idea of concept this trading is for you, and if this is something that you want to continue with and pursue. See you all later. Any questions or concerns, don't hesitate to reach out to me and ask me on any platform. Also, you know, just continue to learn, continue to study, and good luck in your trading career. Share this with people that do want to get involved in trading in the market.